The Malaysian ringgit has been on a journey that almost defines modern Malaysia itself. A currency that once symbolized stability and progress slowly became a mirror of the country's quiet struggles, and now, in 2025, it's showing the first signs of a genuine recovery. But to really understand what's happening to the ringgit, you have to see it not just as money, but as a reflection of how a nation grows, reforms, and survives global pressure. Back in the late 1990s, Malaysia was hit hard by the Asian financial crisis. Currencies across the region were collapsing. Investors pulled their money out, businesses shut down, and the ringgit fell so fast that the government had no choice but to act. In 1998, Malaysia made a bold move. It fixed the ringgit at 3.8 to the US dollar. That peg created stability when chaos ruled Asia. For years, it gave the economy a foundation to rebuild. And rebuild it did. Through the early 2000s, Malaysia's economy grew rapidly. High oil prices, a booming electronics sector, and strong exports gave the ringgit strength. When the government lifted the peg in 2005, the ringgit traded freely again, and for a while, it was one of the strongest currencies in Southeast Asia. Investors admired Malaysia's discipline. The ringgit became a quiet success story. But the world changed. The global financial crisis in 2008 shook confidence in emerging markets. Commodity prices dropped, and Malaysia's dependence on oil and palm exports began to show cracks. Then came years of political uncertainty, slow reforms, and rising debt. By 2015, the ringgit had fallen sharply again, one of the worst performers in Asia that year. For many Malaysians, that fall wasn't just numbers on a screen. It meant imported goods became expensive, salaries lost value, and the cost of living quietly crept up. The weakness continued for years. The pandemic in 2020 made everything worse. Tourism collapsed, trade slowed, and global investors fled to the safety of the US dollar. At one point, the ringgit fell near 4.7 per dollar, a level not seen in decades. It wasn't just a weak currency, it was a symbol of vulnerability. People started asking, why is our money always losing value? Why can't it bounce back like it used to? But the ringgit's story isn't about constant decline. It's about survival. Even in those tough years, Malaysia didn't lose its economic backbone. The manufacturing base stayed solid. Exports of semiconductors, palm oil, and gas continued to bring money in. Inflation stayed moderate compared to other countries. The fundamentals were there, what was missing was confidence. Then slowly, that confidence started to return. In 2023 and 2024, the Malaysian government began to take painful but necessary steps. One of them was subsidy reform. The country had been spending billions to keep fuel and energy prices artificially low. That policy helped citizens in the short term but drained national reserves and scared investors who saw unsustainable spending. When Malaysia began cutting those subsidies, prices rose. Yes, it hurt, but it also showed that the country was willing to fix its finances for the long term. Investors noticed. At the same time, Bank Negara Malaysia, the central bank, kept interest rates steady and refused to chase risky policies. While other nations printed money or changed direction too fast, Malaysia stayed cautious. The result was a quiet stability, not dramatic growth, but a consistent foundation. Meanwhile, Malaysia's export sector evolved. Instead of relying only on oil or palm oil, it moved deeper into semiconductors, solar technology, and electric vehicle components. Global companies like Intel and Infineon expanded production in Penang and Kulim, turning Malaysia into a key link in the world's tech supply chain. That diversification started bringing new life into the economy, and into the ringgit. By 2025, the numbers began to tell a different story. The ringgit, which had been falling for nearly a decade, started to strengthen. Slowly, almost quietly. By the end of the year, one US dollar bought about 4.19 ringgit, around 4% stronger than before. It wasn't a miracle, but it was the first clear sign that the downward spiral had stopped. So what changed? A few things, and all of them matter. The first reason is global. The US dollar had been incredibly strong for years, supported by high interest rates from the Federal Reserve. But by late 2024, the Fed began signaling that the cycle of aggressive rate hikes was ending. That small shift in tone changed everything. When the dollar weakens, currencies like the ringgit finally have space to breathe. The second reason is domestic. Malaysia's inflation stayed under control while its trade balance remained positive. Exports didn't boom, but they stayed steady enough to bring dollars in. Foreign reserves stayed healthy, giving confidence that Malaysia could defend its currency if needed. Investors, always watching for stability, started to re-enter Malaysian bonds and equities. The third reason is perception. After years of decline, markets started to believe that the ringgit had already hit its lowest point. It simply couldn't fall much further without detaching from fundamentals. That shift in mindset created a floor, a psychological boundary where investors began seeing the ringgit as undervalued rather than risky. But the story doesn't end there. The ringgit's strength, or weakness, isn't only about economics. It's also about identity, how Malaysia defines itself in a world that changes faster than ever. The ringgit represents a country balancing modern capitalism with Islamic values, social stability with reform, and domestic needs with global competition. Every time the government adjusts subsidies or interest rates, it's not just about numbers, it's about finding that balance between growth and fairness, between comfort and long-term survival. And this is what makes the current moment special. The ringgit's comeback isn't loud or flashy, but it's built on something real: fiscal discipline, investor confidence, and economic diversity. When you look at the numbers now, Malaysia's economy is growing steadily, inflation is manageable, and foreign investors are returning. The ringgit is stable within a narrow band, between 4.18 and 4.24 per dollar, one of the calmest trading ranges in Asia. That kind of calm used to be unthinkable a few years ago. Analysts now predict that by the end of next year, the ringgit could strengthen further, possibly touching 4.1 or even 4.09. That may sound small, but in currency terms, it's a big shift. It means trust is slowly returning. Still, the ringgit's recovery faces challenges. Malaysia's economy remains deeply connected to global trade. If the US dollar strengthens again due to unexpected rate hikes, or if oil and gas prices drop sharply, the ringgit could face renewed pressure. Domestically, political stability also matters. Investors want to see consistent policies, no surprises, no sudden changes. Every budget announcement, every reform plan, affects how the ringgit is perceived. Another subtle factor is the regional comparison. Countries like Indonesia, Thailand, and Vietnam are all competing for the same pool of investment. If they offer higher returns or faster reforms, money can move quickly out of Malaysia. That's why the ringgit must not only stay stable but also remain supported by real economic growth. Despite these risks, Malaysia's foundation looks stronger today than it did 5 years ago. Manufacturing continues to expand, especially in high-value industries. The country's push into green technology and semiconductor packaging could make it a vital player in global supply chains. Tourism is rebounding, and infrastructure projects like the Penang Transport Master Plan and Johor's Economic Corridor are drawing attention from investors across Asia. Each of these developments brings more confidence in the currency. Because in truth, currencies move not just on interest rates, they move on trust. And trust is exactly what Malaysia is rebuilding. If you zoom out over the past decade, you see a story of 3 clear phases. The first phase was strength, the early 2000s when Malaysia was confident and exports were booming. The second phase was decline, when global shocks, political turmoil, and commodity dependence dragged the ringgit down. And the third phase, the one we're entering now, is recovery, a slow, steady rebuilding of credibility. In many ways, the ringgit's path mirrors the country's own personality: calm, patient, and determined. Malaysia doesn't rush to impress the world with flashy numbers or sudden policy shifts. It rebuilds quietly, step by step. And that's exactly why this recovery feels different, because it's not based on short-term stimulus or speculation. It's based on structural change. Think about what that means in human terms. A stronger ringgit means cheaper imports, lower inflation pressure, and better purchasing power for Malaysians traveling abroad. It means businesses can plan without fear of sudden exchange rate shocks. And for foreign investors, it means confidence that Malaysia can manage its economy responsibly. It also tells a deeper story, that Malaysia is learning to live in a new economic reality. The world today is multipolar. China's slowdown, America's interest rate policy, and global supply chain shifts all create uncertainty. Small countries can't control these forces, they can only adapt. And Malaysia is adapting well. It's becoming more self-reliant, less dependent on any single export, and more integrated into the digital economy. All of this feeds back into the ringgit. When the world believes a country is ready for the future, its currency naturally strengthens. Of course, challenges remain. Domestic consumption is still weak compared to pre-pandemic levels. Government debt is high and will take years to reduce. And Malaysia must manage subsidy reform carefully to avoid burdening low-income families. But these are not signs of crisis, they're signs of a country maturing, facing problems directly instead of hiding from them. And that's what gives the ringgit a new story, not one of fear, but of resilience. The currency that once symbolized crisis now symbolizes endurance. It may never soar to old highs, but maybe it doesn't need to. Maybe stability itself is the real strength. When you step back, you realize that the ringgit's comeback is less about numbers and more about confidence, the kind that grows quietly, not overnight. Malaysia doesn't need headlines saying, "Ringgit skyrockets." It needs trust, consistency, and progress, and those are already in motion. So, what's next for the ringgit? Most analysts predict a gradual appreciation over the next few years, assuming no major shocks. The key is whether Malaysia can keep its fiscal reforms on track and continue attracting long-term investment instead of short-term speculation. If it does, the ringgit could become one of Asia's most stable mid-tier currencies. But even if it stays where it is, the story has already changed. The ringgit is no longer a warning sign, it's a reflection of recovery. It's proof that with patience, discipline, and quiet reform, even a small currency can regain respect in global markets. The fall of the ringgit told the world that Malaysia was struggling. Its comeback tells the world that Malaysia is learning, adapting, and enduring. And maybe that's the bigger victory, not just a stronger exchange rate, but a stronger foundation beneath it. Because in the end, currencies are not just about trade, they're about trust. And the ringgit, after years of doubt, is finally earning that trust back.